Hello and welcome back to another week of your Mortgage Market Movers Weekly, where we are detailing everything that's going on in the macroeconomy to help you make better home buying decisions. So just to kick things off, the 30-year fix is sitting at a 6.81, which is down from last week's 6.84. So it looks like steadily we are dropping down week after week, even if it's a basis point or two. Like I said, we will take what we can get. Last week we had the big FOMC meeting. Markets didn't really respond, and we had much bigger news over the weekend. We'll talk about that, how the markets reacted and everything once we get into the charts. So let's dive in. US 10-year. So like I said, the 30-year fix sitting at a 6.81, and we can see that slowly the interest rates are coming down. Okay, so it looks like it wasn't really a big move today, and let's pull up. So this is a daily chart that we look at, but we can kind of zoom in, and I want to go to, let's look at the bond market real quick to see how the bond market reacted to today. So this is 15-minute time slots. So this was about 4 to 4:15 a.m. And we can see that the bond market really jumped up fairly high up until 12:45. And what was going on was the U.S. stock market, it had started falling, and I believe that there was news surrounding, it was related to Iran, and I want to say it was related to retaliatory attacks. That seemed not to be the case. I'm not quite sure what the news was, but that turned out not to be the case. So we see that the bond market started to sell off after that news hit. And what that did was make it so that the US 10-year, see, this is a 15-minute chart, it fell and then popped back up. So, as we are seeing the U.S. stock market go up higher and higher, we probably will see some sell-off of the bond market, which in turn could raise the U.S. 10-year. But the U.S. stock market's kind of been in a little bit of a standstill. And like I said, the U.S. 10-year is falling. So, hopefully those rates don't get too high. Now, Saturday, it was revealed by Donald Trump via a Truth Social post that 3 nuclear facilities, I believe, in Iran were bombed. Of course, there had been tension between Israel and Iran, with Israel bombing Iran first, and then Iran retaliating back and forth. And Donald Trump, I want to say I don't know if this is substantiated anywhere. However, I had seen reports, like Ted Cruz said that Iran wanted to assassinate Donald Trump. And Donald Trump also said that Iran had weapons of mass destruction, nuclear weapons, and that those needed to be taken out. Regardless of if that was the case or not, the bombs were sent over to Iran over the weekend, and that was pretty big news. So when the U.S. stock market opened up today on Monday, things were down. They climbed up, kind of fell down, and I believe there was just a ceasefire between Israel and Iran as of me recording this, which is 5:44 Eastern Standard on Monday. And that's, what is this? Yeah, today's Monday. Anyway, all right. So there's a ceasefire. This is probably not going to be the best news for the bond market, but, it is good news for the world. So we'll take it. All right. Now let's get back over to, let's get out of the geopolitical realm and get back over to the economy. So last week we had the FOMC meeting. Market really didn't budge too much. It was expected 4.5, 4.25 to 4.5, so it was going to be a rate pause. I believe the market is pricing in 2 rate cuts still. the first to come in September, I want to say. But yeah, I did not listen to the press conference at 2:30, but nothing happened to really move the market too much. So market didn't react too much to that, that's good news. That means nothing unexpected happened. And then we had, all right, this week we had manufacturing PMI, and this is really looking at the Purchasing Managers Index, which is looking at on the manufacturing side, are things expanding or contracting? Above 50 is good, and it was at 52. So it looks like manufacturing-wise, things are going well. And this is good news for us right here, this existing home sales. So this came out at 10 a.m. For the month, 4.03 million residential homes were sold. That's good, right? We don't really want to see that contraction. And I know anecdotally, maybe it's not anecdotally, I think the data is showing that there have been a good bit more homes sitting on the market. Buyers are not participating as much. However, when we see things like this, that's at least one piece of data that might suggest that the housing market is picking back up and the rates are not deterring people as much as maybe some other data may say. So this is definitely a good thing to keep an eye on, this existing home sales. This week we also have, this could be a big thing. This is going to be Tuesday. Chair Powell testifies. So really anytime Powell talks, it's a big deal. And I believe that's in front of the Senate. We also have this new home sales, so that'll be good to see on Wednesday. We have GDP quarter over quarter, unemployment claims. So these are important things to look at. We also have core PCE. So we will keep an eye on those this week to see if anything pops up to impact the market. When looking at the rates, like I said, 6.81 down from 6.84, and it's just kind of ticking down, So back in January, we had that high of 7.04 for the average 30-year fixed. It got all the way down to 6.62 in April, popped back up, but hopefully we see things come down in the future. We can see, hopefully, the bond market recover from some of the things that have happened this year with a little bit of losing confidence in U.S. bonds and treasury bonds. But, I think that this shows that is starting to recover when we see the U.S. 10-year, the 10-year fall, which shows that the 30-year fix is going to fall too. All right. And that's about all I have for you this week. If you have any questions about purchasing a home or refinancing, give us a call at 877-TEAM-MBL or visit us at www.mortgagesbylinda.com and have a great, safe week. Bye.